Hello, everyone. Welcome back. Today, we're diving into a comprehensive stock analysis of PayPal Holdings, ticker symbol PYPL. On the 1 year chart, it's down 12%, and on the 5 year chart, it's down 40%. However, from its peak of 305 to now, which is April 7th, 2024, it's seen an 80% decrease in its stock price. Now, let's dive into the financials. Let's first take a look at the income statement. From 2019 to 2023, PayPal's revenue increased from $17.8 billion to $29.8 billion. The revenue growth rate was robust in the earlier years, above 15%, but slowed down in the last 2 years, averaging around 8%. The gross profit margin increased approximately $8 billion in 2019 to $11.8 billion in 2023. However, the gross profit margin declined from 44.9% in 2019 to 39.6% in 2023, with a peak at 47% in 2021. Operating expenses have fluctuated over the years, with a major drop in 2023 contributing to a higher operating income. Net income has also fluctuated over the years, ranging from $2.5 billion in 2019 to $4.2 billion in 2020 and 2021. It dropped to $2.5 billion in 2022, but increased again in $4.2 billion in 2023. EBITDA EBITDA has increased from $3.4 billion in 2019 to $5.4 billion in 2023, indicating strong operational performance and earnings growth. These fluctuations highlight the importance of closely monitoring the company's financial performance and identifying trends that may impact its future prospects. Of course, also you gotta take into account that accounting plays a major role in these income statement. You have to look at the cash flow statement to get the more accurate numbers. Now let's take a look at the balance sheet. Total current assets increased from 38.5 billion to 62.5 billion over the past 5 years, indicating healthy growth. Total assets grew from $51 billion to $82 billion, showing a substantial increase in the company's asset base. Total current liabilities grew from 27 billion to 48 billion, but still lower than total current assets, which is a positive sign. Total liabilities increased from 34 billion to 61 billion, but total assets exceed total liabilities, indicating a healthy and strong financial position. Debt grew from 5 billion to 10 billion dollars, but the company has more cash and short-term investments, $14 billion, than total debt, $11.8 billion, providing liquidity and ability to pay off debt if needed. Overall, the balance sheet reflects healthy growth in assets, manageable levels of debt, and sufficient liquidity to cover obligations, which is positive for the company's financial stability. Now let's dive into the cash flow statement. Cash from operations has shown some fluctuations over the past 5 years. In 2019, it stood at $4 billion, increased to $6.2 billion in 2020. It remained relatively stable around $5.8 billion in 2021 and 2022. However, there was a notable decrease to $4.8 billion in 2023, despite higher revenues during that period. One possible explanation for this decrease could be attributed to changes in other net operations, possibly reflecting capital reallocation or other financial activities impacting cash from operations. Additionally, capital expenditures have maintained a consistent range between 700 million to 900 million over the same period, with a notable 600 million in 2023. Moreover, PayPal has engaged in several cash acquisitions in 2020 and 2021, indicating strategic investments to enhance its business operations. Furthermore, the company has been actively repurchasing its shares and particularly ramping up from 2021 to 2023 with a peak of $5 billion in common stock repurchases. Despite fluctuation in cash from operations, PayPal has demonstrated a strong and steady leverage free cash flow over the past 5 years, starting from 3.3 billion in 2019. It increased to 5.3 billion in 2020. It remained robust at around 5 billion in 2021 and 2022, before slightly decreasing to 4.2 billion in 2023. Overall, PayPal exhibits a solid cash flow performance with a potential growth, provided it addresses its anomalies in capital allocation and continues to focus on enhancing its operational efficiencies. Let's also consider the recent investor update from February 7th, 2024 from PayPal, which stated PayPal's focus on operating more efficiently and cost-cutting measures in 2023 has contributed to higher operating income. The company's strategic initiatives to reinvest in products and development in engineering and marketing underscores its commitment to innovation and customer-centric growth strategies. Additionally, PayPal's focus on its core business and key metrics such as total payment volume and transaction margin dollars reflects its effort to drive sustainable growth and profitability in the digital payments market. However, challenges such as declining active accounts and margin pressure warrants careful monitoring and proactive management to mitigate risks and capitalize on growth opportunities. We can also state that competition is a huge factor too, such as the financial system, the traditional financial system, like the banks, Wells Fargo, Bank of America, Chase, which they also use Zelle, which helps people peer-to-peer transactions. And we also have to consider fintech like SoFi, etc., which are huge competitors in the market. But none of them at the moment have the branding and the trustworthiness as PayPal has, especially on the e-commerce side. In terms of valuation, PayPal's current PE ratio of 16.4 makes it an appealing investment option, especially considering its historic 5-year average PE of 51. Based on projected revenue growth and profit margins and PE ratios, I estimate PayPal's valuation to be between, on the low end, 57 to 61, and on the high end, between 72 and $91. Um, this valuation range provides investors with a perspective on PayPal's intrinsic value and potential upside considering its current market price. For my projections, I use revenue growth between 6 to 10, profit margin between 14 to 15, free cash flow margin, I use 15, between 15 and 19, PE ratio between 14 and 18, same for price to free cash flow with a safe margin of safety between 12 to 16%. And that's what I believe the valuation of PayPal is in my opinion. In conclusion, PayPal remains a strong player in the payment processing industry with potential for growth despite recent headwinds. Investors should monitor key metrics and market developments closely. If you enjoyed this video, please like and subscribe, and please leave your thoughts down in the comments below on PayPal. Thanks for watching. See you next time.